model then too?
Yeah, so we are a e-commerce marketplace, so very similar to other marketplaces. What it means when you say a marketplace is typically you have buyers and sellers in a marketplace, not just one seller. That would be more of like a retailer. So as a marketplace, we have sellers on the platform, and our business model is fairly simple. So when you complete a transaction, a buyer would pay a shipping fee to be able to get that item. And then a seller pays a take rate simply, which is a percentage of the value of the good that's sold to StockX. And we have payment processing and some things like that. But largely a seller pays a fee and a buyer pays a shipping charge. And that's fundamentally the model of the business. And that's similar to other marketplaces that have take rate businesses.
And so last year you guys raised $100 million at a valuation of just over $1 billion.
Right.
How did you convince investors? I mean, did investors get it, or were they skeptical? Like, this is a tiny little piece of eBay's business, or this is a niche, or this is a fad. How did you sell that to them?
Yeah, so first of all, I mean, I think for many of the venture investors that are looking at some of these companies that are at the breakout stage, they look at usage, they look at how popular the apps are, how quickly these apps are being downloaded, they look at credit card panel data to see what that growth looks like. And so if you're a student of all those metrics, you would start to see the explosive growth that StockX had just a couple of years ago. And so you could see that growth among users and downloads and traffic and credit card transactions, and see that StockX was on this amazing trajectory. I think for us in convincing investors that this is a significant market opportunity, then we actually start to get into the technicals of how big this market could be. In one of our verticals, sneakers alone, it's a $100 billion market globally. The street already looks at that market and defines our part of the market today as a $6 billion market, but it's quickly becoming potentially as large as all of e-commerce in this category. And so when you think about it in those perspectives, the market is not niche-y. It's actually a market size that's very, very large that we're going after. And I think what's interesting about our experience is now that because we're providing access to things that even the brands, their own brands, can't provide access to most consumers. We're the first shopping destination for most of our customers. They come to StockX first.
Because these shoes are selling out.
Yeah, because it's shoes, it's handbags, it's these collectibles. You can't find them at any of the brands that are these being sold. And so as that consumer comes to us as a first destination, they don't go to those brands to shop. They start their journey at StockX, which means that we have an incredible opportunity then to deliver exactly what that customer wants at the beginning of the journey, which is very rare in e-commerce to be that first point of destination, which today is largely Google and Amazon from a commerce perspective, either search or from product-based discovery. And in our categories, it's StockX.
So I want to talk about your relationship with the brands. But first, I think we need to spend a little time talking about the issue du jour, the virus. I mean, that's got to be top of mind for everybody right now. So what impact has the virus, the shutdown, the economic uncertainty, what has that had on your business?
So on the one hand, as a e-commerce business and an online business, the recent events over the last couple of months has been a benefit to our business. We've had more and more traffic and buyers coming to our site because in some respects, traditional retail in some geographies is not available. We've always been a marketplace of scarcity, but now that you can't actually go into a retail location, you're coming to StockX. So on the one hand, it's been great for our business and for our growth. I think. I
mean, on the other hand, people aren't wearing shoes because they're not leaving their houses.
Well, we're finding that people still are very interested in the category, are still shopping. They're shopping online. increasingly so. That shift has been dramatic and maybe even pushed it more increasingly towards companies that have a really strong online experience. But I think more of what I wanted to focus on in answering that question is that very particular to COVID, for us as a company, is that while we are a technology company and an online commerce platform, we stand in the middle of our transactions for our customers. And so we authenticate everything, every item that's sold on our platform, which means that everything that moves from a seller to a buyer goes through a distribution center, a warehouse, an authentication center. We have people in those centers that are coming to work right now, even in places like New Jersey, where that's certainly impacted. And so we have people at the center of everything that we do. And for me as a CEO, it's balancing, what we have happening on the business side, which is a lot of volume, and then really understanding what it takes for us to be able to deliver that, which ultimately is people. And on the people side, for us, our priority is making sure that our team members feel safe, they feel supported, and they feel valued. And so we're doing a lot to actually make sure that our workplace in our authentication centers are safe, that our team members feel safe coming into work, and that we're able to operate our business at scale around the world, despite the fact that it's a very extraordinary circumstance that we all find ourselves in.
So what are you doing? I mean, are those centers open? Are people going into work?
Yeah, they are open. We're open. Those centers are operating. We're operating, under all of the local rules and regulations that we have in all of the different places where we operate. We're operating obviously in multiple states within the U.S., in a couple of countries in Europe, and so we've got to work through that. I think for us specifically for those team members that are on the ground in those warehouses, last week we gave a spot bonus, a one-time bonus to them. We increased the salaries of all of our team members in our authentication centers by 25%. We have other unique benefits that we're rolling out to them. And then we're obviously, safety is a number one concern. So making sure that the workplace is safe, they feel supported in that effort. But we did feel it was really important on the value side that we reflect to our team, which is really, operating in business critical times here, to make sure that we leaned in from even a compensation perspective to make sure that they knew that this was really critical and that we could maintain talent coming into our offices every day.
Well, what happens if those, following the local rules, like what happens if those are shut down, if they're ordered to be shut down? I mean, what's your backup plan? Are you able to keep operating?
Yeah, so for us, we have multiple nodes, so to speak, in the network, so multiple authentication centers. And so in the event that we have to reroute traffic from one authentication center to the other, we will do that. We've been operating that way already over the last couple of weeks. And so since we have multiple nodes in our network, we're able to mitigate to a certain extent changes in that network and traffic to route against that. And so for us, business continuity planning right now operationally is a stand up every single day. We go through site safety and security, any incidents that come up every single day. We're making decisions as a team every day on some of that routing logic. And then we're in front of our teams listening and understanding as to what it feels like right now to actually be working in places where there are shelter in place orders, and yet we're still allowed to operate our business.
Yeah. So earlier we heard from some venture investors saying that the way that they're talking to their portfolio companies is like company by company. Each one has kind of an individual different approach. So what are your investors saying to StockX?
Yeah, we have some of the best investors in the world that are looking at their portfolios and looking at the risk that every portfolio company is facing right now. I would say the future in some respects is uncertain for many of us in that you don't know how long this is going to last. I think for us, operationally, the focus is how can we prepare for the moment right now to make sure that our team is able to operate in this environment. And then as we look to the future, we're looking at different scenarios of macro shifts in demand, macro shifts in the supply chains that we think are going to be actually quite short-lived. We've seen that, for example, in China, where many of the supply chain factories went down, but now they're back up to 80 to 90% capacity on supply chain. Demand has lagged a little bit in China as an example, but it is coming back very, very quickly. And so, depending on how this plays out here in the US and in Europe, it could either be a very quick recovery or we have to be prepared for a scenario where this could be extended for some time uncertain.
I mean, do you think the business is recession proof? A big chunk of it is luxury, and some of these sneakers are selling for thousands of dollars.
Sure. Yeah, so it's interesting. What we're seeing is another side of this argument, which is for a lot of our sellers, you have to appreciate that our sellers depend on StockX for their livelihood. They actually may be running a very sophisticated business that is selling sometimes thousands of pairs of sneakers every single day to a student who's using StockX to fund their education. And so it is really important that we remain up and operational because we're providing livelihood for those individuals. And so what we see in the early part of this cycle is that there is an inventory position for sellers that sellers are essentially selling into this market. And that could be because of their own cash flow needs. It could be financing their livelihood right now. And then we have actually buyers who actually see this time as a market opportunity and sees the price of a rare Jordan 1. Maybe it's coming down and they say, hey, this is short-lived, much like somebody may say, hey, the market is sold off a little.
They're parking their money in sneakers.
They're putting their money in sneakers. And I guess my portfolio, at least right now in sneakers, is still up on the year, which is more than I can say about the S&P. But again, since we're a dynamic marketplace where you have sellers in there that are looking at their own economic opportunity, it's not just about the demand side of the equation here for the $1,000 sneaker. Our typical buyer is in the mid 200s, so not ultra luxury.
I want to talk about authentication because that seems to me like it's the most critical part of your business, and it is also the biggest sort of risk and challenge. One of your sort of peer companies is The RealReal, which does luxury resale of apparel, and they have kind of struggled with some issues around authentication. There was an article last year that talked about how there was not enough training for some of their authenticators and the quotas were very high and items were slipping through the cracks. And so I guess, can you just walk through, how do you authenticate stuff? Yeah. How do you find fakes?
Yeah. So let's actually just go back to how it works. So when a buyer and a seller are matched on our platform, a seller sends that item to StockX for authentication. And that authentication for us is really making sure that we're delivering on the promise of what the buyer expects, which in our category is brand new items. We're not selling used items. So it's a brand new item, which means that it needs to be in its original box. That box can't be damaged, has to be in its original packaging, have all of the different accessories that might have come with that. And then of course, the actual item itself has to be the right color, has to be the right size, can't be damaged, can't have any manufacturing defects. And then lowest on the list, although a lot of focus around it, is whether or not it's real or fake. And so our authentication process is largely designed around making sure that all of those conditions are true before it leaves our authentication center out to that buyer wherever they are. The authentication process at its core does involve authenticators. And so we have hundreds of authenticators that are specialists in our category. We had to create the training for those processes. That wasn't a job description that existed prior to StockX creating that. And so their jobs are, effectively looking at and examining and authenticating every single item that comes through the platform. We're processing millions and millions of trades on a yearly basis. And so I think importantly for us is how is we do that at scale. And so we have these authentication centers that look very much like distribution centers that are around the world. And each one of those authentication centers, at times are processing tens of thousands of items through that every single day.
How many items do they process per hour?
Well, it depends on the actual item that they're authenticating, but a sneaker authenticator can go through sneakers, several in a couple of minutes of time. Again,
how many times, or how often do you guys find fakes?
When we look at those items that would fail that authentication process that I just described on all those different efforts, that would be under 3% in total that would fail that authentication process. And then fakes would be a low percentage of even that. And I think this was not always the case at StockX. When StockX first started, there wasn't any other marketplace that did this authentication process. And in our category, there tends to be a large market of fake product out there. And so when StockX first started, there was a material percentage of the items that came through that were fake. Today, since our process is so, and we're so good at what we do, there's not a lot of incentive for sellers to try and pass fake product through our platform. And in fact, a seller doesn't even get paid until it's past that authentication process. So there's not really an inherent incentive for a seller to try and slip something through the system. And I think what we see happening in other marketplaces even that I've been a part of, most of the big marketplaces do not do any of this. So they essentially rely on seller standards, seller ratings, whitelisting sellers into a platform to hope that nothing fake or nothing inauthentic would go through. And the buyers on the other end, really in this process are getting screwed if in fact there's nobody in the middle that's authenticating that process. And so as a result, we have a retail-like experience and a retail-like expectation, but it's powered by a marketplace. And that puts us in really great stand with our customers.
Okay, and just a couple more questions before we run out of time. What's the relationship been like with the brands? Like Nike sells some shoes, they purposely make it scarce so there's a big line and a lot of excitement around it, and then it goes on to StockX and starts selling for 2 or 10 times more. Have they, and you guys are becoming pretty sizable, you guys work together? Are they trying to pretend you don't exist? Have they tried to buy you?
Yeah. So we're an interesting part of the marketplace. The data that's coming out of our marketplace is really powerful. That data can inform release schedules, can inform release pricing. For brands and for retailers, the challenge of operating in a marketplace is that you would either have to hold inventory or you would have to price all of your items dynamically. Two factors that no brand and no retailer today is willing to do. Most of the stuff that sells on our platform has been released more than 8 weeks ago, sometimes even years ago. And so the brands and the retailers don't hold on to that product. They're designed to essentially create something and sell it. And they're typically sold it through a distribution channel even before they've produced it. So it's a slightly different thing. We think, however, we've got great partnerships and communications with all of the brands, where our platform stands for the brands in the sense that we want to protect the value of that brand experience. And so we've actually started to work with brands. Adidas, as an example, launched a really interesting new release in what we called an initial product offering, an IPO, which was initial release of a line of sneakers that we held at a discrete event and priced it dynamically similar to the public market's price an IPO. And that is a new form of releasing product out into the market that we're pretty excited about, is one way to work with brands that potentially may want to release product into the market differently than they do today.
How many of those IPOs have you done now where the product is first available through StockX and you know, it's based on this Dutch auction?
Yeah, it's been a limited number of IPOs. We actually have one coming up in the next couple of weeks with another well-known brand. For us right now, it's mostly been proving out the business model that you can release product dynamically, you can release product and let the market price it, and that we can move significant amounts of that product in one event. And again, we think over time that this is going to be one of the many ways that brands can participate in this continuous market.
So I wanted to end with a question, kind of looking back on your past jobs. You were president of New York Stock Exchange. I think that's what your title was, and you were a CEO of StubHub. Both of those companies are experiencing some kind of interesting times. NYSE is sort of has gone dark, and StubHub recently furloughed some employees. So if you had to choose which one of those you would be at right now.
Yeah, very, very different businesses, both fundamentally sound businesses in the long term. You know, and you know, I'd say right now I've always been a student of the market. I spent 10 years at the New York Stock Exchange. You know, interestingly enough, a couple of weeks ago, when the market triggered these circuit breakers, I was involved with a team at that time, putting those in place around the flash crash after the financial crisis. And so these rules had largely been in place for almost 10 years before they were triggered. You know, and I also am really interested right now that, you know, I think when I was at the exchange, we were prepared for an open that would be purely electronic. We actually tested that around Hurricane Sandy. We actually operated that week on generators, diesel generators that operated the exchange. We still had people that are there. But I think at the center of all of these, despite the fact that many of these markets today are highly electronic, behind the scenes, there are people, and those people and those systems are still reliant on each other in order to operate seamlessly, despite the fact that we think that we live in a purely electronic world. It takes people to be able to deliver that technology. So it's been really interesting to see how all of this has affected previous places that I've been at or run. That's very interesting.
Well, I thank you so much for your time. This has been really fun to catch up, and yeah, I think we'll end it there.
Thank you, Aaron.
Thank you.
Thank you, Scott. Really, really appreciate your time. Hey, Gary. Really interesting too. I love the idea that people are putting more faith in their purchases of tennis shoes than public equities right now. Interesting if true. Gary, hello.
Hey, thanks for having us.
Sure. Hi, Alexis. Guys, thank you. I know Alexis is dialing in from the East Coast, so I really appreciate you doing this. I know it's getting late there.
Thank you all for tuning in.
Oh, and Gary, I like your setup. I saw you tweeting about this online, and it's true. You look great.
Oh, thanks. Yes, I have a whole YouTube episode on how you too can have this setup.
Yeah, I was looking at it because I don't know what I'm doing. Everybody should check it out. Look how great he looks.
I just ordered the kit.
Did you?
Yeah, youtube.com/GaryTan. It's in the mail. I'm still waiting for one more component. I can be patient, but I want to.
Well, delivery's slowing down a little bit here and there. So I think everybody knows who you guys are, but if you could maybe just talk for a second, because Alexis, Gary was saying there's a lot of people from all over the world. I think they're here partly to see you guys, but Alexis, you're obviously co-founded Reddit, Y Combinator partner. Gary, you were a founder as well, Posterous, Y Combinator. Maybe we could start with where you guys decided to come together and do this thing on your own.
Yeah, we met at YT. I got to interview Gary and accepted him, which was the right call.
Oh, is that right?
So it was like an early phase of the YC interview process.
2008.
Yeah, yeah, and I mean I got the chance to start working alongside him at YC when Gary became one of the first partners there.
That's incredible. So you guys are at YC, and then, you know, we talked to some founders or founder GPs earlier today about that moment when they just decided that they were going to kind of do it for themselves. Was there sort of like any particular impetus for you to strike out on your own? Did you see like a specific opportunity, or you just liked each other and you figured why not?
Oh no, Gary?
Oh no, Gary.
He has such a good setup, and
He
fell
looks
apart, of
great.
course.
It doesn't work, but he
Of
looks
course
fantastic.
it broke.
oh,
Green screen. Oh my God. What are the odds?
It's a miracle this took place at all, honestly. I like poor Erin lost her internet today. I lost my internet.
Well, I mean, Garrett's got a really good story about this. Okay, there, look at that.
All right, I'm back.
Well, when did you decide it was time to spin up Initialized properly, Gary?
Oh, well, honestly, we did learn a ton from Paul Graham and the team at Y Combinator. They gave us an incredible head start in venture broadly. And, you know, the number one thing I realized was a lot of the people, not everyone, but a lot of people who are investors, they're really sort of lean back investors. And as a founder, I really found I got incredible amounts of help from, you know, operator angels. And we were able to, you know, I got to work with Satish Dharmaraj, who ended up becoming managing director at Redpoint, Bill Lee, who started Craft. I mean, they were some of the best people to actually help me build that company. And, you know, going through Y Combinator, Paul Graham and Paul Buchheit, Jeff Ralston, sort of this, you know, that whole set of people helped us so much. I mean, Alexis helped me so much when I was working on my startup in 2008. You know, I started a social network that was based on blogging, and who else could have been better than someone who built one of the best communities? Even in 2005, 2008, it was clear to us it was the #1 community. And, you know, the amazing thing is this is the land of the 10-year overnight success, right? Especially for long-term retention in communities. So, you know, we realized there was a real need for VCs to actually be able to help. And that's why we wanted to build a team of people who actually, you know, it's not just lip service, right? And that's the tricky thing is everyone sort of says the same thing, but very few people really come through, you know, when it actually is time to come through.
Well, there are so many investors out there. How do you guys sort of differentiate yourselves? What's your sort of special message? So for the founders that are watching now or will download this later, what's your sort of special advantage?
I mean, for me, it's like, I'm not different than you, right? Like I'm just like you, but that's why I can understand you. And when you run into the 10,000 landmines that might kill you, we're going to tell you, whoa, there's a landmine right there. We're never going to be the ones we're not your boss. We're not going to tell you what to do. We will tell you what to avoid, and we will put you in touch with the sort of hundreds of people who we've seen go through that process before. Because part of it is like this, you know, the stuff that worked 10 years ago, some of it is timeless, but a lot of it is only happening right now. And we have you know, everyone touts their founder network, but having worked with more YC companies than any of the partners, and then for, you know, way more office hours. And then from our work as sort of the investor of record for, you know, hundreds of companies at this point, that network will basically be brought to bear when there's something that you know, Alexis or I or any of the 6 other partners at Initialized have not actually seen directly. And that's, I mean, you get 8 partners, right? You get 8 partners plus part-time experts, and it's a very different feel. Like most venture firms, you only get to talk to one person.
Right. It's very siloed. So
especially at seed. I mean, at Series A, there are incredible people who have very, very advanced, world-class teams for post-product market fit. But we think we've built something that, you know, very rarely happens for a pre-product market fit.
That's great.
Yeah, no, I couldn't have said it better.
So guys, I think, we never really had much of an agenda sailing into this, but I'm so glad to be talking to both of you because I do think you are well regarded in the industry by your fellow investors and by startup founders. And I think people would like to just sort of get your take on, what's happening, this sort of, gut-wrenching stock market drop and how it's going to impact founders and your fellow investors. I guess, we don't know how long this is going to go on, but maybe if you could talk to us a little bit about what you're telling your portfolio companies right now, what sort of advice you're giving them. And I guess, I'm sure it's very like case by case dependent, but maybe you could give us some examples.
Runway.
Yeah.
Yeah, the number one thing at the end of the day is we're telling people, can you get to 18 months runway? We want it to be a V-shaped thing. It's not economic. It's not endemic or some fundamental thing that's broken about the financial system. This is coming from a global pandemic, and the hope is, and we still believe that we will come out on, we will come back from this, but obviously we need a vaccine. We need the ability to go back to normal for that to happen. And we don't know when that will happen. It may well be 6 to 9 months or longer, simply because in the United States, we are not doing the things that China has done or even that Italy has done. And that's a very difficult position to be in. And as a founder, you have to manage that uncertainty, and you have to make sure you have cash to last to the other side. So 18 months is a lot, but that's sort of what's necessary. And that's what we've been advising our portfolio companies.
And that sounds, it's easier said than done, right? So obviously we're seeing layoffs, we'll see more layoffs. What are some other ways that companies can cut costs right now? Are they are they subleasing their spaces? Are they
Renegotiate everything.
renegotiating?
We have a portfolio company, a full stack commercial real estate firm called Hello Office, which is actually going out of their way to reach out to companies and say, like, now is the time to renegotiate. We can help. I think, there are sort of obvious things that you get cut early around like non-essential marketing, for instance. And look, I'm as bummed as the next person to not be able to go to Cannes Lions this year. But I think we all agree, like, these are very reasonable things to be cutting at times like this. I think one of the advantages is a lot of the companies we've been speaking to have seen the writing on the wall about overinflated revenue multiples, thanks to the whole WeWork debacle. And so for a lot of founders who were paying attention, there were already clear signals early on to be thinking about profitability and pushing toward that. So, at a certain point, I get really one of the fortunate parts about doing early stage investing is also that, this is a time when founders are going to come solving real problems. And I actually expect the next few years to be opportunities for some really great and hopefully impactful companies to get formed in the wake of all this that can not just solve really important business needs, but also do some good in the process.
Right, which is great. Just quickly on that other front, you talked about renegotiate everything. I talked to a debt lender today, and he was talking about the people sort of circling back down, trying to renegotiate that. Do your startups tend to take debt with equity? And if so, is that another conversation that they're having, or are you advising them to do?
Yeah, if anything, we're seeing that debt is actually a decent way to help with. It seems like the debt providers, from what we can tell, have not pulled back generally. So that's good news. Right. Simply because what's interesting is banks can actually borrow at LIBOR. So if anything, borrowing at 0.0% or 0.01% and lending it out at venture debt rates is an incredible business. So we are hoping that that trend will continue, and we think it'll be quite profitable for the debt providers given the interest rate environment.
Yeah.
Aside from that, yeah, the debt providers are also very worried about companies maintaining enough money on the balance sheet. We are all aligned there. That's money on the balance sheet is also runway that lets you get to the other side of this V-shaped recovery.
Right. Yeah, no, my understanding is, they would much rather these companies get through it, obviously, than having to write them off. And in some cases, maybe there's M&A, but M&A takes quite a while to pull together. It's a little bit broad, but Alexis, I've seen you sort of tweeting a lot about what's happening out there. If you don't mind me asking, just sort of as a country, do you have any sort of broader thoughts about how we get through this mess? I don't know if you want to sort of
all the smartest things I'll say are either taking from Gary's tweets or another partner of ours, Kim Lai Cutler's. I think like a lot of Americans, I'm pretty frustrated by the situation right now.
Mm-hmm.
And I live in Florida, which I think we're going to see some really staggering numbers here in the next couple of weeks because of how many elderly population and a unfortunately governor that's taking too long to do the things we need to do to keep them safe.
Right.
Look, what I love about this country is the ingenuity and the resilience of its citizens. I have seen really impressive efforts by entrepreneurs, not just in our portfolio, but broadly, to start either adapting to these new situations or really leaning into the challenges that they face to their own businesses, for their teams. And yeah, clearly we need to be taking a more aggressive approach here. And we're not. And so, I think long-term, the best impact we have comes with our votes. And in the short term, the best impact we have comes with action for the folks who can. You've probably seen quite a few of us tweeting about donations we've done and fundraising we've done. A portfolio company, Flexport, is literally raising millions of dollars in donations to bring medical supplies to the Bay Area and to those healthcare workers. I think we're going to see more and more examples of just citizens finding ways to chip in and help. And it's one of the silver linings of a national crisis is the fact that I think a lot of us are reminded of the decency of just humans towards one another.
Right, absolutely. And you have another, I'm sorry, Alexis, I was gonna say, you have another portfolio company with Initialized HIMS, or no, is it Row? I'm sorry.
Row.
Yeah.
Row, it's not HIMS. And is it administering tests, or how is it, but I know it's sort of trying to help people sort of establish whether or not they have this.
Yeah. Row, unlike the other company you mentioned, has actually built really impressive infrastructure of both pharmacy as well as a telehealth relationship between software between patients and doctors. And so for the last couple of weeks now, they've been offering to all 50 states a free assessment. It starts out with a test, sort of basic Q&A questions, and if you are deemed at and sort of enough risk to be elevated, then you go into a live conversation with a physician or an RN. And, this is something that they're doing that they know costs them money every time it happens, but is the right thing to be doing. And, they're in a rare position as like the only platform that can actually do that. It's instances like this where I think we're going to see telehealth continue to accelerate now, because both at a state and federal level, people are seeing the value of allowing someone to be able to communicate promptly and quickly and cheaply with a medical professional, thanks to smartphones. And I think right broadly, we're going to see a shift come out of this period that I think will help a lot more Americans in the process, extending the access of healthcare to rural parts of the country. Allowing more of these platforms to spring up. We have another company in the portfolio, TruePill, that is the API pharmacy that allows basically every one of the other telehealth companies to run their pharmaceutical business. I think, right, there are some silver linings right now of sort of innovation coming together with government wanting to basically welcome more of it. But look, I think I mean, personally, the federal government, our government, plays a really important role when it comes to the public safety, and this is basically the ultimate example of looking for it to play a more active role.
Yeah, absolutely. Just out of curiosity, what happens just because there's obviously such a dearth of tests? So, and for people who are interested in turning to Roe, so if they have enough symptoms, they're turned over to a medical professional, and does that medical professional then funnel them where?
Yeah, well, this is you hit the nail on the head with the problem, right? I mean, the short headline of it is accessibility of tests is tremendously limited. And I mean, we're seeing countless stories of people who are just visiting hospitals and being turned away because unfortunately the doctors have to make tough decisions about who to use these scarce resources on. So unfortunately, yeah, no, this is not a salve. This is not a magic wand at all. What hopefully this can do is give people more information quicker about the decisions they should be making about their own safety and the safety of people they might come in contact with. But no, this is not by any means a solved problem.
Right. But I mean, any information is useful. I mean, I didn't realize until 2 days ago that a lack of sense of smell or taste was a possible symptoms. I mean, there's just so much that people are still learning on a daily basis. So those are interesting companies. Alexis, and Gary, I've seen you both tweet about sort of, things that you see as opportunities now. I don't know if you funded this new sort of video, I don't know if it's really a video conferencing company, but a company called Around I'd seen got funded somewhat recently. I'm assuming that was sort of in process before coronavirus kind of flared up.
Yeah.
I mean, it wasn't.
Oh, that was years ago. I mean,
okay.
they've been working on really hard tech, applying basically some of the best machine learning techniques. Honestly, sometimes just plain old testing and getting it to work on every type of Apple and Mac and every combination of microphone that exists. It was just plain old good engineering for more than 2 years to actually create something called Around. Amazing noise cancellation. It actually follows your head. So right now here, if I move around, it's it doesn't follow me around. Like, we are literally stuck in a box. I am stuck in this little box, and it takes up my screen. And if we're trying to do remote work, how am I supposed to do remote work like this? I do a screen share. We're still in little boxes, and nobody can actually control or collaborate that way. So and the big thing is, it's really unfair for people who are in particular remote. Now we're all remote, so it's extra important these days. So we're pretty excited about that investment, and we're excited for that to get out there.
I think it's interesting, just as an aside, I mean, I've met the CEO of Zoom, Eric Wan, great guy.
Amazing.
I'm so happy for all success. But I do think, like, there have just been so many web conferencing technologies throughout time. And I think it's really, really interesting. And there's a lot of upstarts now. I'd covered another one that Andreessen Horowitz recently backed called Run the World. And I think it's so interesting that everybody is using Zoom. It seems like a tough nut to crack. I'm just wondering if you have any thoughts about how you do that.
Oh yeah, I mean, Zoom is technically very difficult to do because they've built a runtime for every platform, and that you can just imagine a bug farm there. I mean, that's why they have an army of engineers to make this thing work, and that's why Hangouts is not even quite there. What Around realized is they can actually jump ahead by building on top of Chrome, so they can actually build on top of existing browser technology, but using sort of the state of the art there. And so it's interesting that they're even figuring out bugs and use cases that even the Google teams at Hangouts have not really dealt with yet. But that's sort of what it takes. Like, when we're funding, particularly companies like this, it's really hard tech that's still software. Yeah. And that's what drew us to the team. There are very few teams that were able to get down into the internals of Chrome and actually get Google to fix bugs for them.
Yeah. And it looks super prescient now, but that's the fun thing about getting to work with super early stage founders before they've almost really built anything other than a quick proof of concept. It's that they're the ones who are obsessing over these types of problems, and they're willing to dedicate the next decade plus of their life to solve it. We get to meet them, take a look under the hood. And if we believe in that tech, like Gary said, we were ready to lead an investment and then 6-8 months later, when they are ready to ship something, and the sort of the rest of the world kind of catches up to the trend, so to speak, then it ends up looking prescient. But it's really the founder's obsession and want to solve that problem before anyone even realizes it's a problem that position. Yeah.
Well, it would be good, again, for the people watching, the founders especially, to know what it takes to get a check from you. So Charles Hudson of Precursor Ventures was on earlier, and he really focuses on pre-seed. He'll talk to somebody, I guess, with like a good story, even if there's not necessarily a prototype. What do you need to see to write a check? How much traction or development?
I mean, no traction is fine. We funded around with basically a demo that kind of honestly barely worked, but we were able to dig in to how they were approaching the problem, and we were really impressed by that. So that's how we were able to fund that company even before traction. For me, it comes back to we're makers, like we're cabinet makers, right? Alexis is one of the best people I've ever met who can build, one of the world's biggest communities. And that came from being able from nothing, right? From making sock puppets from, his apartment in Somerville, right? In that very first YC batch in 2005. So, the key thing here is we can sit down with people and identify people who, did what we had to do, I guess. When I met Apurva Mehta, and Instacart is doing really insanely well right now. And we had no idea that any of this stuff was going to happen, honestly. At the end of the day, we met Apurva and he showed me the demo. And this was early days of the iPhone, sort of app platform. And in their actual early, like first 100 people to try the app, I could see that he was a craftsperson because you could scroll the app. And in most demoware, the scroll is jerky, right? It's not properly threaded. It's not loading the images properly. But we could scroll and see it was scrolling really, really smoothly. And the images were sort of properly threaded. And I'm like, even if this is demoware, he figured that out. This person's a builder. And they're going to be able to make something that, frankly, everyone else was pitching that idea, but no one had created it, right? And so we really love makers who frankly can sell, right? And Apurva is not a person who takes a no, right? He takes that no and turns it into a yes. So, I think earlier I tweeted that, what I realize now the job is to find builders who can sell or find salespeople who can build.
Mm-hmm.
And there's an important distinction here that we think about a lot too. I know internally, and I wouldn't want a founder to take away from this, or anyone, that what we're looking for is like what might be referred to as traditional like salesmanship. Is not about, it is being able to sell by being compelling, by deeply understanding your market, by being able to explain it in plain English, by not like slap on the back sales guy or used car salesperson. Like it is salesmanship through storytelling, ability to have like a lucid explanation and understanding of what you want to build. Patreon was a deck when it showed up in Gary's inbox of a few slides and an idea. And it coincided at a time when, frankly, thanks to co-founding Reddit, I got to know a lot of webcomic artists like XKCD, Saturday Morning Breakfast Cereal, Dinosaur Comics. And these are super talented artists who never would have gotten syndication in a traditional newspaper, but were making, very little money relative to massive audiences. And this is like 2009, 2010. And it was clear that what they needed wasn't being served by what was in the market. Ad revenue wasn't meaningful, and Kickstarter was nice. It was a sea change for them, but it required a ton of work just to do projects that were like very feast and famine, because you'd work really hard for 9 months to make a book, ship it to a bunch of people, and then have to do another one. And this idea of patronage was born from the CEO and founder Jack's own problems as a YouTube musician who was driving millions of views, but who wasn't able to couldn't even pay for groceries with that ad revenue because it was so tiny, and it just didn't add up. and you know, patronage has been around since like the Medicis, and funding Michelangelo's cell phone bill so he could you know, paint a ceiling for 4 years. Like that model was not new, but applying it to the internet was. And between Jack and Sam, you had a vision. Sam being the technical co-founder, you had a vision and an ability to execute that was born from a truth that they knew in their souls because they had been building this in a lot of ways for themselves. And it turned out there were, you know, lots of other people who are also in need of it. And the one of the other silver linings to everyone self-quarantining is that there's far more engagement now and far more people who are realizing that they can turn on a webcam and actually start creating content, creating art, and making money from it. And I think, you know, was it Isaac Newton invented something, algebra? No, calculus. He invented something dope. Someone's going to Google this in the video later, but he was locked up during a pandemic and created genius. And I think we're going to see more and more versions of that, thanks to platforms like Patreon during this time. And, you know, as a founder with a deck.
What else are you seeing right now that's interesting? So Alexis, maybe in some, I think I read the San Francisco Magazine interview with you, maybe you were talking about sort of more of an interesting, oh, can you hear me?
Yeah.
Oh, sorry. Family focused tech, but, you know, I'm sure like many more opportunities, right? I mean, I think this is going to cause us to think differently. I think, you know, like in the future, we'll go back to meeting in real life, but I think everyone's like, oh, this is great. Like, let's spend more time on, you know, doing, you know, some sort of like virtual component of events. But I'm just wondering, you know, again, everything's sort of shifting so quickly. But have you sort of identified other opportunities where, again, the founders were thinking about this, you know, some time ago, but right now it's like amazing timing.
Yeah, I mean, I'm on the board of Clipboard Health. Oh shoot, I'm not sure if I was supposed to say that, but they're doing super well. They are actually working on staffing for hundreds of nursing facilities and hospitals across our country. And, you know, we know that there was a huge nursing shortage to begin with, and we're about to go into a time where that workforce is, you know, the most important workforce to all of society. So to be able to bring software to a world that doesn't have that, and I mean, that's the closest thing to software saving lives. And we're pretty excited that they can be helpful there. Obviously, we had no idea that any of this was going to happen.
Right. Right. But as you say, nursing shortages have been an issue for some time. And I'm seeing people, you know, being pulled out of retirement, which is sort of phenomenal right now. And what about, I guess, just also in terms of what's happening out there and pacing. So this is sort of been like a recurring theme throughout the night, but you know, when you look at the top, the LPs are sort of in a bad position right now. And so that puts the VCs in a bad position, which puts their startups in a bad position. Are you, you know, there's a lot of talk about, you know, finding great companies right now, which I'm sure is always the case. But do you need to slow things down? How are you thinking about extending your own, you know, runway, so to speak?
I mean, we're always mindful of pacing, and I think we're also fortunate. I mean, obviously, look, if, you know, public market exposure means that, you know, you're now going to be more allocated than you expected in other sectors. But I think we're fortunate in that we've got some great partners, some great supporters, and a few folks who would like to be. And so, you know, whenever we end up going into that next round of fundraising, I think the conversations are always the same around pacing, where it's just good to always be mindful of that, especially when you're fortunate enough to have great deal flow and see great opportunities. And it's a very fortunate position to be in, to be able to have a lot of those fish kind of hopping in the boat. And so I still maintain that there is, I mean, we saw it sort of as in the YC orbit during the last recession. I mean, Gary, I mean, you had the batch that when did you get your round of financing was done
the day Lehman died was the day my angel round closed.
Right.
And every other company that, you know, tried to raise money but hadn't done it by that date ended up folding.
Yeah. Wow.
So, I mean, G lived through it, built a company through it. And we think that's the kind of advice and that's the kind of guidance that founders are going to be looking for more than ever now in investors. And so I think it keeps us in a really good position.
That's great.
Yeah.
So you don't feel like you're spending most of your time right now in triage, because it also seems like some of the investors I'm talking with are just saying, I mean, I think there's sort of a reluctance to talk about deals right now, understandably, given what a lot of people are going through. But it seems like they're just spending a lot of their time like in board meetings right now and just trying to figure out, how to keep their strongest companies going.
Yeah, not to put other VCs on blast, but often they don't actually keep track of the runway of their companies quite so closely. And for us, we have quarterly review. The day all of this stuff happened, we immediately knew who we needed to spend time with. And this,
Okay.
we started talking about this in February. I wore my first N95 mask to our retreat in Cabo San Lucas, and people at the airport thought I was a little bit nuts. On the other hand, it was already in our mind that it might come over here. So when we did our last portfolio review in February, we were already mindful of anyone who has short runway. We want to make sure we have that conversation. And there's some boards that I was on where I was telling them this was going to happen and they just didn't believe me. But for a few teams, they were able to put the right things into place and start their fundraisers a little bit earlier, just like make the right moves a little bit earlier. So luckily it's not, our schedules are not quite on fire because we're able to be more prepared. On the other hand, we are warning people. The rounds are still getting done. We see VCs continue to be active. They are just more careful. Valuations are coming down.
Right. Well, I was going to have to say, I was one of those people who didn't get it. I mean, I told viewers at the outset that I was really trying hard to like keep this thing together. And I really, really wanted to have this real world event.
Yeah, we're really appreciative of you having us.
I'm sorry?
We're really appreciative of you having us.
No, I'm so happy. But I was going to say, Alexis said some time ago, he's like, you're going to have to move this online. I was like, we'll see. Well, yes, he was right.
This is the advantage to having our Slack channel with Gary and Kim in it, because I feel like I get to see the future on a lot of these things. But look, this is us adapting to it. And if you'll allow us at some point, we'll do this IRL too.
Yeah, I'd love that. Absolutely. So I know it's getting late, especially for you, Alexis, and I didn't want to keep you too long. This has sort of gone on a little longer than I had planned, although I've loved it. I did want to talk to you about, you started Reddit. Reddit's huge. I don't know how close you are to the company. I'm just wondering if it's also seeing sort of more traction, broader audience now that everyone's stuck at home.
Yeah. Well, I came back in 2014 as executive chairman to help lead the turnaround once it was independent from Conde. And then I stepped away from a full-time role to be on the board in 2018 to join back up with Gary and the team at Initialized full-time. So I'm still involved at a board level. And I can say that, yes, like all the other user-generated content sites or social media sites, with all this idle time, we're seeing, record numbers. But, I think the really interesting dynamic that I've been internally musing about a lot. You should interview Kim next, because Kim's got some really smart opinions on this. And I've just been fascinated by how the Fifth Estate has really ascended in the last quarter. And by that, I mean, like, basically randos on social media talking about what they think is important, truth to power, so to speak, except with both the three branches of government representing those first three estates, so the government, and then the fourth estate, obviously traditionally being the press.
Right.
It's been fascinating to watch. And I mean, it's a weird, I think Silicon Valley and the tech bubble certainly has its blind spots. I mean, no doubt, but it has been really surreal watching people be so far ahead. Like, I feel so lucky because of, frankly, just the people I follow on Twitter, that I had such insight into this that like I feel like that has helped me just even better prepare and thinking about
I
my
mean,
family. and
Alexis,
portfolio
you
companies.
this is, this is something that you helped invent, because it's power. The fifth estate is entirely powered by the upvote. The upvote, the retweet,
And the
right?
retweet, yeah, for sure. Not the like button so much, sorry, Zuck, but it is that, right? And so I'm in awe of it, but I'm also really curious to see how it unfolds, because no one has it. The government does not really have control over it. The media does not really have control over it. It operates, because it's, what do you call it, Gary? It's like our global brain.
Yeah.
We're gonna get really meta here.
I mean,
well, I am interested. Well, so I mean, what I think is so fascinating, I was at an antitrust discussion about a month ago where they were trying to get, these regulators were sort of understandably trying to get insights into whether or not companies can survive in the shadow of these companies, and what to be, what should be done about it. Obviously, this is a discussion that's been going on, for at least a year. And yet the big tech companies in this environment are thriving. Like, I don't really love Facebook, but I find myself spending more time on Facebook, which I've tried to sort of deactivate a number of times. But so I guess, I actually have never really heard Reddit thrown in that, but sort of speaking broadly, what do you think of these discussions about breaking up big tech? And do you think after this experience those go away?
Yeah, Reddit's too small to think about breaking up. No, I mean, we have an entire, we have companies that thrive in part because they're giving everyone else a chance to compete with Amazon. So I don't know if that doesn't tell you something, I don't know what else would, but.
Gary?
I think, honestly, I probably don't want the government to intervene. What I want is our startups to actually be successful. And then when they become successful, they're actually arming, thousands of small businesses, medium-sized businesses, and frankly, the retailers who could not possibly hire an engineer to actually survive. And that's a lot. It's 5 tech companies versus 495 who generally don't hire that level of software engineer. And we're in the age of software eating the world. Right. So, if it's not going to be startups, then those other 495 are really, really going to struggle. And so it's actually existential for the rest of the economy that it is actually the balancing force in sort of, we talk about it in Star Wars terms. It's this is the Empire Strikes Back period. And we're really trying to bring about Return of the Jedi. I swear that we came up with that first before Kleiner Perkins, even though
yeah, they really.
I love the moon, but yeah, we came up with that first. No. Yeah, no, it's. I mean, it's apt, right? Like, they're doing it, we're doing it. Like, startups and funding startups done right. We are trying to empower people who cannot access software. And if you're a great software engineer, where do you want to work? Like, it's really hard for you to go, sorry, Safeway, right? Sorry, Kroger, but it's hard for them to hire tech. And that's why Instacart is actually helping them survive. Because otherwise Amazon's going to run the table, and maybe they do get broken up, right? My hope is that because Instacart exists, actually Amazon hopefully doesn't get broken up, because I don't think that would be a good outcome either.
Yeah, I don't know what the answer is either. I mean, I definitely worry that we're going to be in a society where there's 5 companies ultimately, and a lot of people that are out of work, except for the topmost engineers who've been sucked into these companies right out of school. I think it'll be interesting too to see whether they're more hesitant to shop, given the scrutiny they've been under, which I guess could be good news, bad news in this economy.
In terms of M&A?
About M&A, also I'm wondering if they're going to wait. Because nobody really knows where the bottom is, if they're going to start making offers, 6 to 9 months from now.
Yeah, honestly, what's weird about startups, 2008, when we came up, I think that M&A was a much bigger part of what people talked about. These days, everything we fund, we want to fund it for the IPO, because the reality is, I don't think that any of the tech giants are acquisitive at all. They're sitting on giant cash hoards, and frankly, they sort of don't know what to do with the cash. I mean,
Mhm.
that's definitely a Peter Thielism that I totally believe, that Google is sitting on a cash hoard. And when you sit on a cash hoard, it means I don't know what else to do with that money. There are not projects that have positive net IRR that I can put that money into. I could not hire people to go work on a thing that could make more money.
Right.
And if anything, these companies have sort of become giant babysitting places for very, very smart tech people.
Mm.
Right. Well, they certainly try sometimes, right, with their sort of moonshot ideas, which for the most part haven't really panned out. Before we go, I did also want to talk to you about IPOs. So speaking of Peter Thiel, I think he was sort of like an early advocate of this, maybe in his counsel to Mark Zuckerberg, on whose board he's sat from the outset. But did founders blow it? I mean, a lot of companies seem to have maybe, missed their window. Certainly 2020 doesn't look like a great year. It was going to be a great year. Now it's going to not be a great year. And meanwhile, companies have to watch their burn. They're laying people off. I don't know if they're going to be looking strong coming out of this in 2021. Do you think this is going to change founder behavior? Do you think they'll stop thinking that being private is the way to go?
I think a lot of it comes back to governance. This is why we're big backers of Eric Ries and Long-Term Stock Exchange. We think that companies should go public sooner, and they would, because it is easier to raise capital for some companies, and it should be a lot easier. Staying private is not good for employees. It's not good for investors. It's not good for the founders, actually. Things like WeWork happen because the IPO market is not open, right? There should be better governance. And we think people should IPO, but then they shouldn't be subject to the things that Twitter is sort of subject to recently, or I think Box recently also had sort of activist investors come in who, some of them are incredibly smart people. On the other hand, like some of them don't understand tech at all. And so that's why people don't go public, right? There is so much money, there's so much capital in the world, and founders want to stay the course. Like, they want to make long-term investments into their businesses. And that's one of the big reasons we think, and Eric thinks, we don't see enough IPOs, right? The private markets are still open. There's still a lot of capital there. I found this incredible video that I'm going to post on my YouTube channel at some point with Michael Arrington actually interviewing Yuri Milner. And this was at Davos right after he did the Facebook investment. It was an amazing, amazing video. I'll tweet it shortly, but it's, he talks about how, or why he did it. It's because he did an analysis of IPOs, and he found that there was another 20x upside in the average tech company IPO. And this was like late 2000s. And so you've seen this, the macro shift of the past 10, 20 years has been, not going public, going private, and these mega funds, right? And that's why, right? That's ultimately why.
What do you think about shareholder rights, though? I mean, it feels like I keep hearing this argument that, because these activist investors, it's a huge problem, but a lot of companies are obviously going public and their founders have, shareholder rights that we've never seen before, or voting rights, I should say, which seems to insulate them. So how do you square those two things?
That's an ugly hack. Like that is a result of wanting to inoculate yourself against all the stuff Gary's talking about being public. But the part that was so appealing about Eric's pitch for Long-Term Stock Exchange was the fact that it behooves, I think, all of us to have voting rights be tied to longevity as an owner, right? As a shareholder, and whether that's an employee or whether that's an investor. Like, I wish markets behaved with more like long-term thinking. I think we all would, and I think it's a very clever approach to getting the upside that Gary's talking about, which is only going to continue, right? As software is eating the world, et cetera, to get more of that upside in the hands of regular investors, as opposed to the private equity growth folks who can afford to be there and play there.
Yeah, this current situation is just the worst of both worlds, right? And we don't want Zuck's kids to have a perpetual like dictatorship emperor status. I mean, the funny meme that we sort of talk about internally is these tech giants actually start to resemble world governments, right? They're multinational. They operate in every country. They have deep control of like other elections. I mean, that, you know, and that's the scary thought, right? Like, why should they have that? Long-term stock exchange says you should get those governance rights if you're a long-term holder, right? Hold it for 5 years, hold it for 10 years. Then you've shown that you actually can be aligned on over the long term, right? We're not talking about perpetual emperorship. That's not the right way. You know, clearly that's the wrong way to do governance for these mega companies. You know, I think that it's much safer to say, you know, there are going to be people who buy and hold, and they believe in this company, but they're the ones who should also have dominion over how it should be managed.
Absolutely. I don't think people realize that these are sort of perpetual rights in lots of ways, or in many cases. But I'm a big fan of tenured, is it called tenured voting? I'm not sure what the language that Eric uses, but this idea has been sort of floating around for a while, and I think it's been tested and unsuccessfully, but I hope it takes off because I think it makes all the sense in the world. Guys, before we go, and again, thank you so much for coming.
Sure thing.
To your computer screens. I still really appreciate it. I guess any last sort of words of encouragement for founders out there who are sort of looking at kind of a bleak, you know, next few months?
Look, guys, yeah. I mean, look, we're going to get through this as long as you have cash and you've built something of great value. You need to get to the other side of this, and you know, the macro trend, everything that you're doing in software, using hardware, building technology, this is what the world really needs. You're solving real problems, and all you have to do is get to the other side of this V shape.
Yeah, and if you find yourself with runway, but solving a problem that right now the world just absolutely does not want or need, it's worth actually taking a minute, because we have the luxury of software, and saying like, is there something else we could be doing that would solve an acute problem right now, and even considering shifting the entire business? Because if what you're doing now just is not a viable solution in this new world and in a different economy, go find something that is. Use the fact that you're a builder and a maker, and you don't have, you know, warehouses full of physical things or factories that have to be shut down. You can just open a laptop and say, all right, like, let's start anew. If you are in that early phase.
Great. I think that's great advice. I mean, it certainly puts a lot of things into a new perspective for a lot of us. Guys, thank you again. I really appreciate it.
Oh, wait, actually, I have one more thing too.
Yeah, go ahead.
Because you're self-quarantine, you're self-quarantining like a good citizen, with whom you're self-quarantining with. Now, the people you're self-quarantining with, give them a hug, and these are very anxious, very stressful times, and not to mention trying to start a company. Look, there's one right there. Thank you.
Oh.
Hi. And be with your families, right? Take care of your families, be with them. You know, we're going to get through this, and just take care of the people around you. You know, we're going to get through this together.
And yourself. Take care of yourself too, because if you don't take care of yourself, you can't take care of them.
Right,
So.
you got to put the mask on first, and then take care of everybody else. Okay, guys.
That's right.
Thank you so much. Really appreciate it. And thank you everybody who tuned in. And remember, you can download this on demand afterward. Okay.
Right on.
Thanks again. We'll do it again.
Aaron, thanks, Sarah.